Good morning. Welcome to BHG Financial Investments and Securities. I am your host, the Wall Street Bully. Thanks, guys, for tuning in with me this morning. I want to go over a stock that is heavy in my portfolio. It currently takes up 9% of my portfolio. Ladies and gentlemen, I am talking about Applied Materials. Again, that is Applied Materials. This stock, oh my God, I am so stoked about this particular stock. It exists within the semiconductor, but it's not a semiconductor. It exists within the semiconductor space, but it's not a semiconductor. Um, this stock basically provides the raw materials that semiconductors use to make chips. The exact profile of the company reads, we are the leader in materials engineering solutions used to produce virtually every new chip and advanced display in the world. Our expertise in modifying materials at atomic levels and on an industrial scale enables customers to transform possibilities into reality. At Applied Materials, our innovations make possible the technology shaping the future. And this resonates home with me because here at BHG, our slogan and motto is turning possibilities into reality. So that statement in itself is just phenomenal, and it just gives even more credence to this company. Um, so Applied Materials is awesome. They've had a really good run. I kind of want to go into some numbers of the company. Let me flip back into what I have here. At some point I'm going to get a split screen so you guys can also see what I'm watching. But right now, as it is, the current PE ratio for Applied Materials is at 33.8. It's slightly high. Again, I like for my PE ratio to be lower than 20 upon purchasing. Um, but Applied Materials has just had a phenomenal run, and so I really wanted to purchase this company before it ran any further. The price to earnings growth for this company is 1.59. That's pretty much close to one. I really like for it to be less than one. Um, but being that close is not bad. Again, this is a price to earnings growth ratio, and this is projected over the next 5 years. So yeah, typically you would like for this number to be below one. Um, but 1.5 is not bad. It's not bad at all. The return on equity for this company, typically we want return on equity to be above 20. Anything greater than 20 is pretty good for return on equity ratio. For this company is 38.32. So your return on shareholders' equity is pretty good. So it'll let you know how well this company is using that shareholder uh, equity that's coming into the company. So I mean, it's amazing. It's amazing. I'm really, like I said before, I'm stoked about this company. I'm stoked about having it in my portfolio. The return on invested capital is at 29.13, which is really good. It's letting you know that the company is doing well. Um, my eyes are running water. Hold on one second. Sorry about that. Allergies. Ugh. Sorry about that. I kind of also want to take a look at debt. Debt is a huge thing that I look for when investing in any company, fundamentally. Um, the less debt, the better. Because if the company is already constrained down with debt, that kind of restricts how far they could potentially move, or how far they could potentially increase as far as earnings go. Um, so anything that's holding them down, debt is like a weight. So it buries the company down. So I always try to look for companies that have a clean balance sheet. And as the channel goes on, I'm going to go through the different things I look for in terms of documentation, in terms of balance sheets, cash flow statements, um, in terms of income statements, all these things. I'm going to take you guys through all of that. But right now, I kind of want to get back to Applied Materials. So let's take a look at the debt on this company to see. Margins look phenomenal. 44.96 of a gross margin, not bad at all. Net profit margin is 21.19. Typically, I like for my net profit margin to be over 20. So, for it to be 21.19, that's kind of pushing me in the direction of a company that I like to invest in. And as far as competitive advantage, Applied Materials doesn't really have much competition. I think it's one more company out there. It's a larger company. I don't really want to talk about them. Taiwan Semiconductor. Um, it's a pretty decent company, but for me, I like to invest in American companies. I like to invest in American-owned companies, American businesses. So that's also another thing that kind of drew me into Applied Materials. Again, they do not own the lion's share of the market share, but they're not bad. It's not a bad company at all. And again, their numbers are phenomenal. Let's take a look at the debt. Okay. So debt to equity ratio. Now, for debt to equity ratio, I like for it to be less than 2. And that's kind of a parameter that you kind of set for these things. And as we continue to invest, you'll start to see where you want these metrics to be, what threshold you want them to fall in. As far as debt to equity ratio, again, I like for it to be below 2. Applied Materials' current debt to equity ratio is 0.47. That is amazing. The company is just doing great things. Total debt to total capital is 32.20. That's for the most recent quarter. Again, quick ratio is also something I like to look at because that lets me know how fast and how well the company has the ability to pay off its debt. And again, we really want to stay away from debt. I can't stress that enough. The less debt you have on your balance sheet, the better off you are. That's with anything. That's with stocks and just even in your own personal life. I mean, the less debt you have, the better. So the quick ratio is 2.30. So now with this one, you want it to be greater than 1. So if the number is greater than 1, that lets you know that this company has the ability to pay off its debt fairly well. And Applied Materials currently has a quick ratio of 2.30. I'm going to upload a video pretty soon talking about, because these are just the numbers, these are numbers that I look for, the valuation numbers that I'm looking into when I'm, pretty much looking at my company and evaluating my companies. I'm going to load a video pretty soon on Applied Materials that really takes us down through the balance sheet. It takes us through the income statement. It takes us through the cash flow statement. Once we really start to get into this type of an analysis, this really propels us to whether or not we want to invest in this company or not. In this market, I said before in a previous video, stocks are through the roof. So it's very, 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 very difficult to find a company with a price earnings ratio below 20. If you can find it and the company has continuous revenue, I mean, when I say continuous, I mean the revenue has been increasing quarter over quarter over quarter, year over year over year. That's consistent revenue. If you can find that and a PE of 20 and let's see, a price to earnings growth ratio of less than 1, wow, that's a winner. That's a winner. But there's just so many things. You start there, but there are other things you look for when you want to invest as well. Again, it's like painting a picture. Certain things that you're looking for. But as you continue to look and as you continue to find more and more things, it's like the picture paints itself. And you can really step back and say, hey, this is a company that I think is worth investing in. And from the research that I've conducted, I think Applied Materials is definitely a company worth investing in. Again, I'll take you guys through those statements soon. Hopefully that'll be coming up tomorrow. But stay tuned here at BHG Financial Investments and Securities. Again, I am your host, the Wall Street Bully. Thanks again, guys. Be blessed.